I'm going to change the atmosphere a little bit, going from the excitement of Sullivan 2, which is truly amazing. I'm going to start talking about something that is less exciting, but conforms to the name of this conference, which is an investors conference. So we have an investment that we'd like to present to you today, Westvault. Forward-looking statements. More forward-looking statements. I'm going to do this in reverse order. I'm going to say what we're trying to achieve, what our strategy is, way before I start talking about the project and the property. The project and the property is good, but hey, there's lots around there. It's more what we're trying to do here as a strategy that might be of interest to an investor. Okay, so the deal is we've got over on the far right of the picture here, we've got the gold in the ground. It's in Nevada. It's fully permitted. There are no questions. We've got 600 boreholes into this thing. 13 metallurgical programs been done on it. It's been around for a number of years. We got it in 2014, moved it forward through the engineering and the permitting process to today. Studies are in the rearview mirror. We have a fully executable project build plan. We have got a current number, 66 million, to get this thing started for a 200 million US plus NPV project. So that's where we're at. We're saying, okay, you can go into production. Some of that gold in the ground is going to be consumed by the production, inevitably, and it involves risk. It always involves risk, especially for a single project company like ours. We don't have a construction team. I'm a mining guy. I've built things. I've built mines. I know the importance of having a seasoned team together to build a mine. So as much as I'd love to build this mine, I'm not sure that it's in the shareholders' interests. So how do you make money out of it if you're not going to build it? And so I'll go to a little bit of credibility first. We've done this sort of thing before. My partners, Mike Jones, Frank Hallam, they founded West Timmins Mining, big payday, went from about 20 or 40 million into it. They got bought out by Kirkland Lake for 424 million. Mag Silver, you might have heard about that. And there's also Platinum Group Metals, which is still going. So Westvault Mining is the little baby, if you like, of the company. So we think a patience is going to pay. This little graph, you're all probably very familiar with it. The producers are producing like crazy. They need to replace what they're producing every year. They have to go and find more. But the discoveries are not coming at the rate of production. So time's on our side. So our strategy is simple. We were going to go and build a mine. Then in 2017, something interesting happened. This individual, Peter Palmetto, president of Sun Valley Gold, starts buying our shares in the market, and we don't know what's happening. So eventually we get in touch with him and find out who it is, and he said, well, I want to buy your company. Now, it's still a public company, but he's at 46%. So he came on about 2 years ago as chairman of the company, so he's my boss, and he said, Sandy, here's what we're going to do. You've done a great job. You've got it ready to build. Let's not build it because it's in the shareholders' interest, and he's the major shareholder, obviously, so it's in my interest and anybody else who cares to invest in it. We're going to make money by doing it the other way. And that is somebody's going to come along and see the value in this. Just as John was saying, it's kind of undervalued. And one day it'll be a happy moment for all of us. Without risk, without building, without raising money, without dilution. So again, a little bit of credibility, early investor. Rick helped us buy the property in 2014, put some money in, and is still an investor. I called him up a year ago. You still in? Rick said yes. I said, what do you think of the strategy of don't build it and they will come? And he said he loves it, and it's better than if the alternative is terror. By that, he meant the terror of a single project company attempting to go from having a property to being a producer. We all know that the roadside's littered with the wreckage of people who tried to do that. Thomas Kaplan, obviously, of the Electrum Group, billionaire, made it all in the gold space. He is not an investor, but I love this quote, which supports our approach. People think production is how you make money. It is not. It is selling something at a high price. That is how you make money. Buy low, sell high. So all these people, whether it's Ross Beatty, Silver Standard did this as they built their company out. They acquired and they acquired and they held what they held and so on. This is another way of doing it. So in this conference, you've heard about exploration companies who are looking to find something out of nothing. And we're in the other group where we've actually got something that is valuable, and one day it's going to be rewarding to shareholders who invest in it now. So that's the value proposition. I'm going to skip over some of these slides in the interest of time. They're on our website if you want to go and look at it. We've got $3.5 million US cash on hand. That's going to take us about 3 years before we need to raise money. I'm the only full-time employee in the company at this stage. We shrank the team down. I'm doing this with part-time CFO Frank Hallam, my partner, and we have very low holding costs, and we do that on purpose. Here's the people. Moving on. You can read that in your own time. It's important to understand the shareholding structure. 72% is institutionally held. 46% is held by one institution. That's my boss, Sun Valley Gold. Okay? We've got Rafa, Eric Sprott, AG 2000, management insiders at 1.5. I'm an insider. I've got about 500,000 shares, which I bought with my money. I think that's the right way to do it. And by the way, because I'm the only full-time employee and I'm not actually fully engaged, I proposed to take a pay cut, which the board was very quick to take up on. They said, yes, we'll do that. So I take a little bit less money than full pay. That might change if we get busy. Okay, so let's get to the project. I'm going to zip over that quickly because it is a simple Nevada-based project. So these are numbers from a recent study that we did, February last year. We published it. We have an after-tax NPV5 at 1790 gold, 200 million US. Nice little project. Initial capital very low. And the reason for that is you go to the first hill, you go to the top of it, you start mining it, run a mine, no crushing, you put it on the pad, put the cyanide to it, carbon, ship the carbon off-site. Let somebody else do the stripping and regeneration. So there isn't even a gold plant. Contract mining, there'll be a handful of employees. Offices and the lab are going to be in the town of Tonopah. We don't put any buildings up on site. Very simple. It's basically quarrying. Recoverable gold is 560,000 ounces. We'd love it to be bigger, but it is what it is, 70,000 ounces a year for 8 years. It's well drilled. We're pretty sure that what we say is going to be there will be there. The metallurgy is well studied as well. On the first pit, we've got 2 pits, 2 years at the first one, 6 years at the second one. 82% recovery from run of mine on the first pit. Second one, we got a crush, and we get about 70% recovery. Both of these are very good numbers. But the first pit really performs very well, very low cost, very high recovery, and it provides all the cash from the first pit to build out the second pit. That's why we can do this for $66 million to get in and going. And by the way, that is peak capital. We don't need to go back to the market for any capital after that, 66 million. Okay, sensitivity table. If you believe gold's going to go to whatever number you choose, at 2,600 gold, if we go 2,600 gold this year, we'll have an internal rate of return of 100%. Not too bad. Where it is, down at the bottom of Nevada, halfway between Reno and Vegas. It's in the old mining district of Tonopah. We have complaints from the locals there, very vigorously voiced by one individual who got up at a public meeting I was running, and I thought, oh, here he comes. He said, I got a problem with you guys. When are you going to build that mine and stop talking about it? So it's a pro-mining town. No problem there with anything. And there's our property, 12,000 acres. We've got potential for expansion. First mine is going to be the Three Hills mine, 2 years there. You can see the mineralization. It's right at the top. First blast is in ore. You just mine it down. Simple, simple. There's a layout moving on from there. It is prospective. Geologists have got these targets that they've identified, more targets they've identified. I mean, we've got some good hits outside of the pit. We've got, 67 meters at 3 grams in one hole outside the pit. So we're not drilling. We're going to leave that. The right time, in our view, of doing that is when the mine is up and running. You start drilling to expand it, not now. Second pit will be there for 6 years. Again, a little bit higher stripping ratio, but 1.2 to 1, pretty good. And you're almost, the first blast is in ore. So we mine away at that for 6 years, 70,000. We've got a highway next to it. We've got power. We have water. We have water rights. We have all the permits, federal permits for both pits. All the necessary state permits are in hand and in good standing. Again, the second pit, the geologists have got all these targets that they say somebody could go and have a look at. So it is prospective. At the bottom of the second pit, right down at the bottom, we've got the feeder, the root, if you like, and we've got some pretty good concentrated grades where the overall grade is 0.6 grams per ton average over the project. Here we've got things like 40 meters at 5 grams a ton, 13 meters at 4 grams a ton, and so on. So towards the end of the life of the mine, it'll go on for a little bit. They get down there, they're going to drill into it, and they'll go on for a little bit longer. Okay, recent milestones, not of interest. In summary, we buy low, sell high, let the gold cycle do the heavy lifting. It's a patient play, but it's a safe one. High margin, you know, as I say, 2,500 gold, we're at 100% IRR after tax. It's a great jurisdiction. It is essentially de-risked, ready to build project. It's also highly leveraged to the gold price because our operating cost is low. The increase in costs, which we all know, the recent study we've done last year was an update on the 2016 study. Now, costs have gone through the roof since 2016 to last year, but gold price went up as well. And actually, our IRR increased because it's more leverage to gold than is diminished by increasing costs. So it's pretty safe on that. It's in safe hands. As an investor, you want to know there's going to be no flip-flopping on the strategy. Peter Palmetto, my boss, he's not going to waver. I can give you comfort on that. And low overhead, as I mentioned, we run on a shoestring. We've got I share office space here in downtown Vancouver. I'm it. So rest assured, this is from my boss. We're disciplined. We're not going to waver. We're patient, and we are 100% shareholder focused. So if you're looking for an investment, we might be it. If you're looking for the excitement and the risk of exploration and all that sort of stuff, that's other people. Thanks for your time.